Online traders say the volatility in the market is resulting in panic buying and selling by investors. Since the onset of the tariff war, emerging market currencies like the rand have weakened significantly. This spells trouble for the average South African, as it means the cost of living will increase sharply if the weakness is sustained. But for online trader Tshepo Papule, this is a profitable season.
As a trader, for example, my $1 that I could have bought 3 years ago couldn't buy me a loaf of bread, but this morning it can buy me a loaf of bread and bring back some change, because it generally the value of my $1 is now worth more. So even when I'm withdrawing money, if I were to withdraw $1,000, it is worth a lot more today than it was worth a couple of weeks ago. On the other hand as well, it means that when I go buy at my local grocery store, because thanks to the emergence of the global banks and digital wallets, it means that I can actually buy directly from my digital wallet at ShopRite, at Checkers, at Spar, and I now can buy more. My buying power is increased. So the value of my investment has grown. At the same time, the cost of things in South Africa are now cheaper. So it's a double win for us traders.
Harry Schatzer, co-founder and CEO at Future Forex, acknowledges the devastating impact the higher tariffs have on the South African economy and the rand. This has been made worse by uncertainty around the future of the government of national unity in South Africa. He encourages South Africans to consider investing offshore, saying it is at times like this, when the rand weakens significantly against major currencies, that gains will be made.
What we've preached for years is, even if you live in South Africa, even if you work in South Africa, even if you're optimistic about South Africa, it makes sense to diversify yourself into dollars, euros, pounds, first world economies, with the logic that should something like this go wrong, you're protected from a global point of view. So when the rand is doing poorly, you are still protected because your dollars retain their value. And so that's why we assist people with moving money offshore and diversifying their wealth, instead of being fully in rands, because ultimately you won't be protected if you're only in rands and something like this takes place.
Andre Cilia, the director at Treasury One, warns though that while it is a profitable time for foreign currency earners, many lack the facilities to lock up the gains like big businesses often have.
The problem with a lot of the individuals is that they might not have the facilities like companies to be able to lock this in on a longer term. If you were a company and you had facilities with a bank and you were receiving pounds or US dollars on a monthly basis for your exports, you would be able to go into the market and take out a forward cover contract that stabilizes your income at this levels around 25 for the next 12 or 18 months. As a private individual, you might not have that facilities, and you're left open to the risk of a speedy recovery of the rand, for instance, and that means that your salary increase, in inverted commas, that you got because of the exchange rate can also very quickly disappear.
Traders expect the currency volatility to continue as the trade war intensifies. Earlier today, China announced an increase in tariffs from 34% to 84% on US goods, resulting in the US stock index moving sharply lower. The rand began to firm up during the day, but weakened again on the back of China's 84% import tariff announcement. Diabosito, SABC News, Johannesburg.